times, drawing nearly 49 billion. It sets its final IPO price at 106 riyals a share, which is at the top end of the range. Let's get some insights on the markets here and bring in Salah Shamma. He's head of MENA equities at Franklin Templeton. Salah, thank you so much for joining us today. So first to this unfolding situation in Gaza and Israel's war on Hamas. How do you see the economic and market spillovers unfolding from here?
Good morning, Dan. Well, again, from a market perspective, I mean, the reaction has been quite resilient. Market's response has been contained. Definitely, risk premium has increased within the region, and as evidenced by the spike that we've been seeing in spreads across different issuers. However, going into the market activity, going into the first day, we expected some volatility, which we saw. But over the past sessions during the week, we've seen those losses being paired, which indicates kind of a holding pattern right now in terms of activity. Fundamentally, we don't think that although the situation is quite serious, but we do believe that the longer-term story and the thesis remains intact. Now, that being said, knowing that the situation is quite fluid, if the theater of operations were to increase and include wider countries, then probably that warrants a reconsideration on our end. But for the time being, I think it's wait and see, and the reaction has been quite contained.
Okay, so wait and see. And I wanted to ask you about Israel specifically, because Moody's says a prolonged or wider regional conflicts could test Israel's credit profile. Do you think a downgrade would be warranted in this environment?
Look, I've got limited knowledge on the Israeli market, so probably I'm not the best person to ask. But probably a prolonged war, which should affect kind of the economic prospects of a country such as Israel.
When it comes to market sentiment and direction, I know you said you're positive when it comes to markets in the UAE and Saudi Arabia. What sectors are you looking at specifically, and where is the opportunity in this part of the world? Opportunity in crisis, I guess you could say.
Sure. What we're witnessing right now within the region, within the UAE and Saudi particularly, is a secular growth trend on the back of, I would say, quite an ambitious investment plan. We're seeing a budding demographic story that's underpinned by, I would say, an influx of expatriates, which is supporting the consumption and the local economies. So, we're quite optimistic on any sector that provides us exposure to that local demand, as well as to the large-scale investment program that we're seeing over the next couple of years, as well as the giga projects. And usually that segment is within the mid-cap segment that provides you that best exposure. So Saudi and the UAE are top markets in the GCC, and the mid-cap segment as a section of the market that offers that exposure.
We have to talk about oil as well. Do you think there is a geopolitical risk premium in the price at the moment?
I mean, most definitely right now, probably, that risk premium has increased on oil prices. However, that being said, we don't believe that the direct implications of the conflict could affect production. Probably we need to keep a close eye on any potential U.S. sanctions on Iranian crude or any security threats around the Strait of Hormuz that can affect the transport of oil. But barring those, we do believe that right now the pricing on oil is being determined by shorter term supply and demand dynamics and the fluctuations that we're seeing in terms of inventories. Probably these are driving oil prices more than the risk premium that's governed from the conflict.